The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. Man, it's like one of those nursery rhymes there. How many times much wood could woodchuck chuck? Wood could chuck wood, there, Shawn. You know.
Maybe that's
Shawn,
maybe that's what you were saying when you were a kid. I was not.
I can only imagine, Shawn.
Things might have been very different out your way versus northern New Jersey. So we're just going to leave it at that.
I bet they probably were. So Shawn's out down in Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the market. So Shawn, how you doing?
I'm doing pretty good, Casey. Pretty good.
Good deal, man. I saw something yesterday, and it's we talked about this on the last podcast we did about soybeans, and they were kind of in the mess we were in, and that the numbers that we saw coming from the WASDE reports. The WASDE reports were just there's a lot of soybeans out there. So I saw an article about soybean crush coming out, and this last month was the biggest crush month ever recorded. And so I started thinking about that, and I thought, how many months in a row like that you'd have to have something like that take place in order to start moving the market, Shawn? And I thought no better person to ask than Shawn Hackett that question. So what do you thought? What are your thoughts on that, Shawn?
Well, I mean, we've been having strong crush because of the renewable diesel thing. And obviously when soybean prices fall, if they fall faster than oil and meal, and the crush margins go up, then it increases purchases of soybeans to make more oil and meal. But my view is that in order to sustain that, you need to have enough demand for meal and oil to sustain the margin, or else you do that for a few months, and then the product prices fall, and then your crush margin contracts, and then you pull back. I really still believe that in order to get the crush margin to really rock and roll for the longer term, we need to have something change with the renewable diesel protocol. The EPA either needs to change their mandates and increase them, and we certainly need to start doing something to promote more bean oil consumption for renewable diesel than allowing everyone to use whatever they want. And so the classic example of this is that somehow, for some reason, we've been allowing massive imports of used palm oil, cooking oil from China, of all places, that we've been bringing into the country, using it to make renewable diesel instead of using bean oil, meaning it's taking the place of bean oil demand. So here we are with a massive glut of soybeans. We could make as much bean oil as we want. We can produce as much renewable diesel that we want right now from bean oil, and yet we're deciding to bring in outside feedstocks instead and use that instead. It just is. I even saw that we're bringing in sugar ethanol from Brazil to make renewable diesel. It's like,
Why?
I just think we just need to, like, right now, we don't need these outside suppliers. We just need to, we got right now, we need to use bean oil and just help the farmer out, help the price up, help the crush out, and start using up the surplus. It's a good thing to have a surplus. If you want to make a lot of renewable diesel, this is what you are looking for. Huge amount of supplies, and we can promote domestic production, keep the money in-house. And so, the hope is, as the farm crisis, I'm going to call it, because we're developing one, we'll promote that. And in an election year, sure seems like that would be a pretty friendly topic to support if you're trying to gain every vote that you can in any given state, in any given region. I just would think that's a winning strategy. And there is talk, I've been seeing, clear talk that the Congress is considering banning imports of palm oil into the country, at least. And it's a lot, Casey. I spoke at an Anderson's conference a few months back, and they showed how much used palm oil we're bringing in to make renewable diesel. It's just, it's a lot. And if we were not bringing it in, instead we were using bean oil instead, we'd have a very different soybean market right now. A very, very different soybean market right now.
Man, that's crazy. You wonder what what's the mindset behind that? Like, have you heard anybody explain what the thought process for doing that is?
From what I heard from people that claim to know more about it than I do, the thought process, at least at the time that these decisions were made, maybe remember all the imports occurred when soybean prices were higher. Okay.
Right.
But that it was cheaper at the time to do it, meaning it was offering a cheaper opportunity for the renewable diesel crushers to make a margin. And secondly, that palm oil, from what I understand, has a better, according to them, a better carbon footprint than used cooking oil. Used palm oil cooking oil has a better carbon footprint than does using bean oil. And supposedly, the between being cheaper and providing a better carbon footprint for the green policies, they viewed that this would be a win-win. for them to do that. The problem is that I'm not so sure it is better from a green, from a carbon footprint standpoint. I looked at the information, didn't look very convincing to me. And secondly, we now have a surplus here. And maybe I understand that, you're trying to do the best you can during a time where maybe soybeans are short, and I get that, but they're not short. So I think we need to prioritize, bringing imports in when prices are high and bringing and using our own when prices are low, and not letting those imports really hurt what's supposed to be a domestic industry. Really, from what I understand, this whole renewable diesel thing was supposed to help the U.S. farmer. It was supposed to help U.S. domestic demand. It was supposed to keep the demand here, not rely so much on foreign exports to supply high prices for and keep the money in house. And so they did all of that, and they're letting all those foreign imports come in, taking away our bean oil market. I mean, look, I'm all for the free market. I'm all for, but there's so much government intervention now in everything that's being done that I don't think this, the carbon footprint thing and making it more difficult to use oil versus, use palm oil. It just doesn't make any sense to me why we would want to do that at a time that we're looking at potentially, some of the greatest potentially equity losses in crop row production in history ahead if things don't change. I just think that instead of handing government payments out like they did during the trade war, which were massive, they're going to be much, much bigger now. Why don't you just stop letting the imports in and let the market pay for it instead of letting the taxpayer pay for it? That's how I look at it. So
it's also the same people that missed the greatest trading opportunity on the world when it came to putting back the strategic reserve in there. So, I mean, what do you expect, right?
Well, it's funny, I forget the number. We reduced the petroleum reserve by hundreds of millions of barrels we reduced it by, and so they made a big splash here in the last few months that we're rebuilding, we're putting it back, and they're buying like 4 million barrels. We're going to buy 4 million barrels in the next quarter. We're starting to put that oil back. 4 million barrels.
Yeah. It's a dent. A small little
4 million barrels a quarter. So let's see, that's 16 million barrels a year in 10 years. That's 100. It's so it's how about buying 30 or 40 million barrels a quarter? I mean, that's what you need if you really want to refill that sucker up when prices are low right now, and apparently the supplies are there. 4 million barrels. I mean, come on, that's like it's a joke.
Yeah, you talk about a boost to the economy. The jobs that it creates, and there's some backside too when it comes to prices, but at the same time, I don't know.
Well, I mean, just from just from a energy security standpoint, we don't know what the future holds. War, exactly. We could have an outbreak of war. We could have all kinds of problems like we had with COVID, but it'd be war instead. I mean, if you look at what China's doing, China is building massive energy reserves.
For what reason, Shawn? Why would you do something like that?
Yeah, I mean, and so in the world we live in, I think we would want to do that. I think we would probably want to do that. Just, it's always good to have a safety net, Casey. The world is a crazy place. We've seen in the last 30 years, black swan events that if you told anybody that any one of those would have occurred 25 years ago, 30 years ago, everyone would have said, you definitely have lost it. We need to, you need some help. We have some medication for you. And, if we had like 4 or 5 of these things, so we're just in a world so I just think we have to expect the unexpected, and I just don't think that we're going to want to. We had minus $35 a barrel crude oil for a period of time because we couldn't.
And I bought the entire market that day. So I bought everything.
Well, what I'm saying is,
I know that's crazy.
Yeah. That I just think Doesn't mean we have to go all the way back to where we were. Maybe that was excessive, but I think we should put at least half of it back. I mean, but if you're really serious about doing it, then 4 million barrels a day. I mean, 4 million barrels a quarter is probably needs to be a little more than that if you want to.
Yeah.
If you really want to be serious. Sounds like to me they're just saying they're doing it because it's politically good to say they're doing it, but they don't really want to do it. That's what it sounds like to me, but I could be wrong. So
yeah, I think you're probably onto something there, Shawn. All right, let's jump down to South America real quick. Argentina's got a elevated threat of frost here. Wheat's a little bit further along because you can see some damage there. World supply of wheat is already in a on the low side. And not that Argentina has a big swing in the world wheat supply, but every little bit counts. So I guess your thoughts there, Shawn.
I think they're fifth largest exporter. I mean, definitely not the biggest driver in the world, but it's interesting. As bearish as everybody is about wheat and how we supposedly have this burdensome oversupply. I mean, that's it's a talk because prices are now $5.30 versus $12.30 where they were a few years back. Our global stocks to usage is at the lowest level since 2014. If you take those global stocks and you take China out, they're at the 10th lowest since 2014. If you look at the ending stocks in exporters' hands, the top 10 exporters relative to demand, we're at the lowest level since 2007. We are way tighter than we were when we were $12.30. The perception back then was because of the war that the Russian-Ukraine supplies would be off the table. Of course, that never actually happened. But we are far, far tighter than we were back then. And we're, in fact, arguably some of the tightest supply levels relative to demand we've been at, arguably, in at least 10 to 15 years. So yes, and we continue to fall. I think we've fallen 6 or 7 years in a row in all of these metrics. And at this price level, Casey, the hope of churning that trend around there's no chance that trend is going to turn around at these price levels. And at the subsoil moisture we have in Russia, Ukraine, so if these things have been falling when we've had much better prices than today, I just, at some point you reach the tipping point. At some point, somebody makes a phone call and says, I want it, and it's not coming. And you never know what that exact choke point's going to be, but it historically it says we're not going to go too much longer with exporters. We're at 3.67% stocks to usage in exporters' hands because the exporters control the price. That's how the price is determined, right? The lowest we've ever seen was in 2007 at 3.15% stocks to usage. I mean, there's not a whole lot of examples below where we are right now. So I just look at all that. So yeah, everything matters to me at this point. And so even though Argentina is the fifth largest exporter in the world and not the kingpin, I think at this point everything does matter, and we'll have to see how this frost plays out later in the month. But it looks pretty encompassing for Argentina. And, it's really a problem when you enter the jointing phase, and much more wheat will be entering the jointing phase late this month than the frost that happened, a couple of weeks ago. So just another signpost ahead. And I just saw that there was a big downgrade to the Russian-Ukraine wheat crop, Sovcon, they lowered it by 2 or 3 million metric tons. There's supposedly the one to listen to over there. And then I saw that the European wheat crop was lowered. The France wheat crop was lowered.
Yeah.
And this is all after the USDA report. All the numbers I just mentioned to you, by the way, were what the USDA said. And the USDA was considerably higher than any of these numbers that just came out from these private institutions. Yeah. So the actual numbers are probably considerably smaller than what I just mentioned. And they're already excruciatingly small on a historical basis. It just seems to me, we're playing with fire here, and if you play with fire for too long, and you play with fireworks for too long, and you outlive your stay for too long, you light the wrong fireworks that has a short fuse, and you don't get away. And I just feel, I'm not sure that's the best analogy, but that's how I feel we're at right now. I think wheat is playing with fire, and I don't think that how important wheat is to the global nutritional world. They rely on wheat so much for the nutritional value and keeping themselves alive. I just think we're playing with fire here, and we keep thinking, oh, I got all this wheat. Yeah, okay, I get it. The U.S. had a large wheat crop. That's all the numbers I've just mentioned. It's already factoring that in, and we're only the fourth largest exporter in the world. Way overemphasizing large U.S. crop, and the demand is ripping. I mean, we keep seeing very strong demand for wheat here, so something's going to give sooner or later. No one knows for sure. Is it today, tomorrow, is an hour from now? But I just, I think we're going to look back on this period of time and go, what in the world were we thinking putting wheat down here, given this arguably incredibly bullish fundamental situation? It's just the way the market works, but it's also an opportunity for those that need physical supplies. If you're Egypt or somebody, the Middle East that need a lot of wheat, and gosh, I just would be making sure I just like this petroleum reserve. I'd be building my wheat reserve, strategic reserve as much as I could right now, because I think you're playing with fire. If you don't, you could find yourself in a world of hurt 6 months or 12 months from now, having to pay much higher cash prices. So.
Okay. All right. Last thing, Shawn, we'll shut it down. Looking at the current hurricane situation developing in the Atlantic, you got Ernesto out there that's going to stay way off the coast. It's going to stay out in the middle of the Atlantic. But there's a few developing behind it that have got some ears perked up. So I guess as you're looking at that, what are your thoughts there?
Peak hurricane season, meaning I believe 60% of all hurricanes that have ever messed with the U.S. Have occurred between the 4th week of August to the 3rd week of September. I think 65%. So, we're entering the most active window, and typically the most active seasons tend to be when you're not El Nino, which we're not. We're not La Nina, which would be more beneficial, but we're not El Nino. You tend to need warm sea surface temperatures in the Gulf of Mexico, in the Bay of Campeche, and off the coast of the Atlantic. We have that. And then you tend to want to have a low wind shear. I wouldn't call the wind shear low, but it is not to the level degree that would be strong enough to push back on those other conditions. The few things that have kept the hurricane season a little bit more subdued has been very active Saharan dust moving into our area. All indications are that those strong easterly winds that have been bringing that Saharan dust over are going to calm down. They typically do that in September, so every indication is that's going to slow down, which will improve moisture content in the atmosphere. And so that's going to be beneficial. The other factor is the Maiden-Julian oscillation. It's where tropical convection is firing up around the world. Typically, phase 4 ish is a very, very conducive state for the Maiden-Julian oscillation to be in, to promote close, active hurricanes close by to where they can make landfall. And we're going to be moving the MJO into that, phase 4, give or take, in that phase 4 zone, over the next 2 to 3 weeks. So everything would seem to be in place doesn't mean we have to have a landfalling hurricane. It just means that everything is in place to have a more active period. And usually it means some of these are going to find their way into finding a home on U.S. shores. So I would, and all the models are definitely showing a lot of activity picking up next week, and really getting very, very active, getting into mid-late September, which means you need to be on guard for markets like cotton. You need to be on guard for markets like orange juice. You need to be on guard for markets like natural gas, because those are the 3 markets that tend to be most impacted. So potentially even rice, as they're trying to, get the crop harvested. it's a little more of a narrow band there in Arkansas, but certainly that's something to pay attention to, at least for beyond the humanitarian risks that are there. Those would be the 3 or 4 marks to really pay attention to, depending on where, when, how long, how large, and what exactly happens. So
right on. Okay. All right, Shawn, good stuff as usual. Folks want to reach out to you, get more information about what it is you're doing over at Hackett Financial. What's the best way to do that?
At Faradex11 is our Twitter page. We have a LinkedIn page. Our website is Hackett, Hackett, advisors.com. We from time to time, and I mean from time to time, we're not looking to be social media influencers. We try to work hard for our customers and do everything we can, but from time to time we will put stuff on there that will talk about some of our cycles, our statistics, and the correlation stuff that we talk about to get an idea of what we see happening with agriculture, the low 2 percentile of a history of subsoil moisture in Brazil, what they may mean for the growing season, something we've never seen before, those kinds of things. From time to time, we'll talk about it. That may be a good place for for those that watch your show to take a look to see if what we do might be of value to those that have their fingers in agriculture.
Right on. Shawn, appreciate you being on the podcast, man. We'll talk to you again next week.
Look forward to it, Casey. Thanks.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version of this. If you've ever wondered what Shawn Hackett looked like, go to the YouTube channel. Check him out. He's right there. Moving Iron Podcast YouTube channel. Check him out over there, and you can see what Shawn Hackett looks like. You can also every once in a while you'll see his sidekick, the cat that'll come in and jump on his lap while we're doing this.
I'm the scarecrow.
That's right. Yeah, that's right. So check him out over there. Check us out over there, and you can see everything that's going on with the Moving Iron Podcast. So you can also go to movingironllc.com and get everything you need for the Moving Iron Summit as well. Coming up here, Shawn's going to be there. So if you're a dealer, if you're in finance, if you are someone that's looking at different analytics when it comes to how these different companies are settling in on Wall Street and those kind of things, this is a place for you to come check things out. So if you're interested in understanding the used equipment marketplace, the new marketplace, if you want to know what's going on with everything that's out there, send me an email at movingironpodcast at movingironpodcast.com, and I'll get you all the information from the Moving Iron Summit coming up here. It's November 4th through the 6th. We start at 1 o'clock on the 4th, we end at noon on the 6th, and it's jam-packed full of stuff. Shawn will be there giving his 2 cents on what's happening there, as well as some other great speakers. So check that out. So with that, I'm Casey Seymour with Shawn Hackett. Let's move smart, folks. Out.
Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment, like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again.